A very good morning, folks. Welcome to the Flow Show. It's Thursday, the 10th of November, and US CPI Day. Morning, Kay. Morning, Stel.
Morning, lads.
Hello.
Everyone all right?
Hi. Yeah, all good, man. And you?
Good. Who did you get in our in the World Cup thing? Did you put your number in?
I got Japan. So I'm not too hopeful, but worse things can happen. Look at 2004 in the European Championships, right? When we won it.
Were Japan in European Championships, were they?
Yeah, we've had bigger upsets. Let's put it at that.
Yeah, definitely, mate. Definitely. Yeah. Kay, you happy with your pick?
Very happy, mate. I don't know a single player from Ecuador, but I'm over ecstatic. I will be playing the first game I know against Qatar, and that's it.
What have you got, Ryan?
No, don't ask him. Still, stop it. Stop that one. Those crybabies, they have been swapping teams, and I hope Simon is listening. I really feel for you, Simon. I mean, you did a lot of hard work, and those crybaby swappers, they've been swapping teams around. So don't even ask which team Ryan has.
There shouldn't be any swapping whatsoever.
Yeah, I know. I agree with you still. So
where is it? Oh, Australia. Okay, I see. Australia.
Well, I'm not one to turn down an opportunity, Stelios.
So what, you swapped it for which one?
Well, Gavin swapped with Jane. Jane had England,
yeah,
and had Spain. So Jane wanted Spain. So Gavin did a swap with her. And then I jokingly said, "Oh, do you fancy swapping?"
Not jokingly, mate. Not jokingly. Stop that crap.
So what, you swapped Australia for England?
I swapped Australia for England.
Nice. Okay.
So, yeah, it was all good fun. It was all a bit of fun. I would have been happy with Australia, but never one to miss out an opportunity. And yeah, just for the folks who may not know, we've got a little bit of a friendly lucky sweep going on for the World Cup. Everyone picked a number between 1 and 32, and then it got randomly assigned a team. There's a bit of horse trading going on last night. A bit of team swapping. The other guys, Kay's just jealous. Okay,
no, I'm not. I've already changed my avatar. I am Ecuador until further notice, until I get kicked out, and then straight to the pub.
Okay. Well, when Ecuador get booted out in the groups,
I'll go to the pub.
You can come and share England with me, mate. When Ecuador go out.
No, I'm sure. If anything, I'll be sharing Belgium with Shaka.
Oh, here's Gavin. Blame James and Ryan for that. Oh, see, look, they're all passing the buck now. Anyway, let's get back to work and what we're all here for. Anyway, obviously, lots to talk about. The US CPI, the most important data point ever since the last most important data point ever, and indeed until the next most important data point ever. Captain Charisma over at the Bank of Japan, Kuroda, said that the Japanese economy is picking up, but they are not at the point to win debate and exit, and will maintain easy policy. He also said he's got no desire to be reappointed, so he's going to be off next year. But one line he did come out with, which was pretty interesting, saying that they may be seeing slight signs of a change in firms' cautious sentiment that was behind the prolonged deflation period. So that is, in their terms, probably about as hawkish as you're going to get from the Bank of Japan. Obviously, the mindset among firms in Japan itself is of a very negative inflation environment. So potentially seeing slight signs of a change in that cautiousness from firms is something that could snowball into something pretty big if it really turns around. But sometimes turning sentiment in Japan is like steering an oil tanker with a teaspoon. It doesn't happen overnight. What do you make of Kuroda's stuff? Because he also had a meeting with Kishida, which a lot of people were saying was a bit impromptu, but they do happen. Kay?
Yeah, they first of all, those meetings do happen indeed, especially I think must have been the meeting must have been a little bit around perhaps the interventions and the economic sentiment and see where they stand. I've also seen the Japanese companies keeping the capex flat or positive for the coming year. So I think the Kuroda comments were a little bit linked to what the major companies are saying. It's very, very small changes, but they might be preparing us for a change to come. I've always said, like, it's either going to come right at the end of Kuroda's tenure, or just when the new one steps in, perhaps. But then that's going to be right around the time where the wage talks will happen. So I think a lot may happen in Japan around March, April. I think that's going to be, if not before, of course, but that is going to be, if nothing happens before, that's going to be the big moment, I think, to watch and to keep a very close eye on what's going on in Japan. We may indeed start to see changes coming up.
Yeah.
So indeed. And that's been my play from the start. I always thought Kuroda, sit in the seat, don't change anything, but prepare for a change. And it does look like, not every day, because he's still saying that inflation will come back to 2% in 2023-24. But well, on the other hand, it's not while inflation comes back that they can't do any changes, right? It's the way you prepare the companies. They don't give a toss about what the market thinks. It's the way to prepare Japan for a change, right? That they want to do, and the market will trade around it. And Kishida also seems a little bit more willing to adapt a couple of things. But then against that, we still have the fundamentals, which are the huge stimulus packages put in place, and demographics, which are for sure still not helping and won't probably be helping Japan for the foreseeable future.
Yeah, exactly. As always with Japan, as we say, it's always a long view. You have to take of that. They don't change things every 5 minutes. So it's just a case of sitting and waiting and adding up the evidence that we get from the data and stuff to see when those changes may start to happen.
But I would like to add that they do occasionally come up with a big swing. Let's but it's a thing for months, if not years, right? We look at Abenomics and then look at what happened, the surprise in 2016 at Davos when Kuroda went all guns blazing on YCC and all that stuff. So they do occasionally come up with a big swing, and then the market will probably shift gears again.
Exactly. Yeah. Okay, going to move across the water to Australia. There was another consumer sentiment, the CPI sentiment data expectations following the I think the Westpac ones we had the other day. They rose to 6% from 5.8% prior. This is from the Melbourne Institute. So another shift up in rate expectations there. This is coming as Bullock says that potentially the RBA are nearing the point that they might be able to pause and take stock of things, following some other comments from her that we had yesterday, that they're still prepared to raise rates maybe faster than they currently are if inflation outlook needs it. And speaking of inflation, Fed Barkin was out saying that the inflation fight may lead to a downturn, but that's a risk we'll have to take. So pushing a narrative ahead of the CPI today, so that they're going to keep fighting and if there's going to be some pain, they're going to hike through it and continue policy through it. Feds Evans said that he sees the benefits to adjusting the pace of Fed moves soon. So he's perhaps doing his bit to lay the groundwork for lower rates. Bidden was out with a bit of waffle overnight as well about the elections and stuff. Maybe the key comment is that he's intending to run again in the next main elections, so he's going to be in the frame. Coming across to Europe, and French third quarter wages were up 0.9%. They missed expectations of 1.2% and were lower than the 1.1% prior. So something the ECB is also keeping an eye on is wages. And the general consensus is that wages are picking up, but they're not getting too hot yet to bring a big bit of heat to inflation in its totality. The German finance minister doing his usual cautious note to the rest of Europe, saying that a currency union needs fiscal rules, and there should not be one-sided loosening of fiscal rules. Always the policeman regarding European fiscal policies. That comes despite them potentially looking at doubling their net debt issuance next year. Of course, that sounds big on paper, but it is still within their fiscal framework that they have in Germany. EU's von der Leyen said that the EU may be short 30 BCM of gas for next summer's storage. Pretty much full for the winter, barring a really deep cold turn. They've had a bit of luck these last couple of months with a bit of a warm October and a warm start to November. But eyes are now looking towards next summer and filling up the storages again in that period. There's obviously been a lot of rushing around to fill storages for the winter. I'm not sure what happened to all those boats that were parked up off the coast of Spain, not being able to unload because the storage was full. But obviously they're now going to be reckoning they're going to be short into the summer next year, but obviously lots to happen there. We had some fun and games with Russia yesterday afternoon as well. We got a dropping headline from one of the military chiefs there, pretty much saying that Russia was pulling back in the Kherson region and town of Kherson, and the market saw that as, oh, this is a bit of a risk turn, you know, maybe an end of hostilities, maybe a withdrawal. That wasn't the case. The reason for the pullback was probably more tactical. They've gone from one side of the river to the other. They've obviously got winter in mind, the possibility of flooding. There's a big dam not too far from there, apparently, that could be under attack from both sides, depending on who's parked up where. They were worried about their supply lines being cut off, being the wrong side of the river. So they've pulled back to the other side. Could mean we get a little bit of a stalemate going into the winter, a bit of a line drawn on that river. Obviously, it makes it a bit binary who might take this dam out and cause the other one pain and whatever. But it wasn't the risk move or risk positive headline that the market initially took it as. You can see on that euro dollar chart that move late yesterday afternoon up to 0080. That was the headline there. It didn't last long once everyone realized what was going on, and down we came again. But that gives you a small indication of what positive risk news might mean if we ever get it. Certainly it'll be bigger than that 60-70 pip move. You're probably talking hundreds of pips if we get any sort of resolution headline or anything towards peace in that area. But there it gives you some good opportunities if you're trading the headlines, sift into the details, find out what headlines really mean. Is it really positive? Is it not? And I know a few of the guys, myself included, jumped on euro dollar shorts on that move and made some decent pips out of it. So all thumbs up to headline trading. Looking at the data quickly, not a lot out yesterday. The NBA was showing weakness yet again, as we've been pointing out for quite some time. in these numbers. It's been on the slide, on the slide, on the slide continually. Take something like the purchase index, and you can see what it's been doing there, all the way down, falling, falling, falling. As you know, this is now being reflected in most of the main housing numbers in one shape, form or another. So no let up in that one there. The other thing we had was more fun and games in the crypto stuff. And still, I'm sure you've got something to say today about your mate, your mate Sailor. But what happened was we had this potential Binance rescue of FTX, and then we got headlines dropping in the afternoon that they were potentially or threatening to pull out of the deal after taking a first look at their books. Obviously didn't like what they saw and have since gone running, and that pretty much sealed the deal for the break of the 17,000 level. And yeah, still your old mates, people talking about where his next pain level is.
Yeah, there was somebody, I mean, I don't know how valid it is, but there was somebody, I saw a piece on Twitter, somebody analyzing basically MicroStrategy and what they own, and, you know, from the stuff that they've publicly given in terms of information, it seems that the pain threshold starts at around, well, roughly where we are now, like somewhere between 15 and 17K. But again, I don't know. I don't know. But what we can be sure of is that we're really close now. And if that whale starts selling, which they will have to at some point if it keeps dropping, then that's going to expedite things. And I think we're going to get to the 10 to 12K area that we've been talking about for ages and ages. I think we're going to get there. Now, you know, you guys probably read the FTX acquisition didn't go through in the end, and the Binance chairman said they did their due diligence, and after doing that, they decided not to go through. So imagine the kind of gaping hole that they found. I mean, I can't even imagine it. But this is obviously not good news, and this rebound that we're seeing today in cryptos, I think, should be definitely sold into. So I see no reason for cryptos to recover unless we get a massively surprising inflation number to the downside today. And talking about inflation, you know, I saw a research piece from somebody sent it over to me, and it was they're talking about, oh yes, there's a good chance that it's going to decrease because of non-durable goods reducing, also housing. I mean, I don't know what rents, because housing is measured by rental, right? I think in the US, or is it actually no, it's the owner's equivalent rent, right, that they use as a measure. I don't know if this is already fed through, or if it's feeding through. I still think the surprise is most likely to be on the upside. So we're expecting 8%. I think 8.1, 8.2 is likely. So we have to be wary of that. Having said all that, if you take a position into the inflation number, you're taking a view on the inflation number. So unless you know what it is, you're once again gambling. Just want to put that out there.
Yeah, I think there's a lot of confusion over this rental stuff and its effect. It does have a fairly big weighting on it. I think that's the main thing, but people still have a lot of questions over, you know, why is it up so high and how long is it going to stay so high for so long? But, you know, for us mere mortals, we'll let the propeller heads tell us all about that after the numbers, after we've decided what the main numbers are. And we'll look at that right now. Let's have a quick look at what we're expecting. Make sure I'm on the right one. There we go. So for the CPI today, two numbers we need to look at, and they're both as equally important. You know, the headline CPI is expected to drop 2 pips to 8%. The core is expected to dip a point to 6.5%. Now, the state of play is we've seen CPI, headline CPI, dropping for 3 months on the trot. Not a huge drop, but it's beginning to look like a trend. On the flip side, the core has gained for 2 reports on the trot. Now, as I'm fond of mentioning, the core is a bit more lagging from the headline. It's more the headline will get affected by sharper price moves in commodities, oil, lumber, all that sort of thing, more quickly than the core. The core is when that feeds through to more domestic prices. It comes down the chain, if you like, into the economy. So it's a bit of a lagger. So this core pickup might be against what inflation was doing, 3, 4, 5 months ago in the headline number. But we're not going to ignore what it does today. We could see CPI dip, who knows how much, 1, 2, 3 points, and we might see the core go up 1 or 2 points. That will make it a bit of a neutral report, because one will offset the other. Because although headline inflation is dropping, it's saying that inflation at the ground level is continuing to rise, and that's the part that the Fed has most concern about. Now, of course, a perfect storm for either the hawks or the doves. So on the hawkish side, a perfect storm will be the headline going up and the core going up. For the doves, it'll be both going down, and the pivoters be both going down. So you need to look at all the different outcomes that we can get. If the headline goes up, but the core comes down, again, that's a little bit more neutral. Secondary to that, look at the variation from what's expected. That's going to give you a sense of scale in how big any price moves might be. We're expecting 8% for the headline. If it comes in at 8.1, 7.9, maybe even 7.8, we're potentially not going to get a big price move in markets. Obviously, depending on what people want to do, the pivoters and the like. But if we're getting a move, 7.6, something like that, a real decent move that shows a real drop in inflation, that's going to get the markets going a bit more. So it's a rough rule of thumb to look at the variation as well, to gauge how much of a price move we may get. If it comes in at 8%, 7.9%, you might be talking 30, 40 pips in the dollar pairs, just as a rough back of the envelope guess. If it's coming in 7.7, 7.6, 7.5, then you may be looking at, 100 pip move, depending what the market wants to do with it and the rest of the details. So that's how I gauge the numbers in terms of what the market might do with it. The exercise for trading it is the same as every other thing, the FOMC, the NFP, whatever you want to look at. You set up the same way, you pick your levels, you look at the wider ranges, you look at the bigger levels that are 40, 50, 100 pips away, and that's your guide. That's where, if the price is going to do something, change a trend, move out of a range, it's the big levels that they've got to break. So something like dollar yen, we know where that is. On the downside is this 145, 144.90. Okay, so if we get in lower inflation, a strong lower read, dollar's going to fall, yield's going to fall. Where's it got to break to change the trend for this pair? It's got to break that area. On the top side, if we get strong numbers, what's it got to do? Initially, it's got to get above 147, the mid 147s. Then we're looking 148, 148 and a half, 149s. So that's where I'll be setting out my stalls. I'm not too interested in the noise in the middle, because I damned as well won't be probably fast enough to grab the numbers as they drop out. Plus, I like to give myself a bit of time just to read it, assess it, know what it means. And that's the other key point. Whatever the numbers are, the only question you have to ask is, what does this mean for the Fed? Does it mean the Fed are changing course, or does it mean the Fed are going to stay on course? And once you've answered that question, again, you can then apply that to your trading. Okay, if it's not going to, if this inflation comes in soft, but it's not going to stop Powell from hiking, it's not going to change their path, then you know that if you get a move lower in a dollar and it becomes excessive, or it hits one of your strong levels, you know potentially that's a fade trade, because it's not going to change the Fed's mind. And that's the way I'll be setting up for this data, way I set up for all the big data and big events. Guys, firstly, Kay, still, sorry, I haven't asked you if you've got any other items that you want to bring up in the news or whatever that you've seen. Otherwise, give us your thoughts on the inflation.
Yeah, I've seen over the past couple of days those EU-UK talks. I don't know whether it's going to end up being false alert, but Sunak is meeting with Irish mate Martin today, and combined with some euro crosses coming off today, euro sterling actually reversed from what it did yesterday. And I think part of it is perhaps a bit of hopium that finally some things may be moving on the Northern Ireland protocol, and that reversed euro sterling as well today. So I'm going to keep an eye on that one as well, because it could make this euro sterling really move, right? If they talk and they all seem like just that little bit more optimistic, but if they come to the table and say like, okay, we keep things like they are, this is our standpoint, and the opposite party doesn't move, these things this hopium can pretty quickly fade again, and that may send sterling back down. But
yeah, we had that yesterday. Bloomberg
yeah,
dropped.
2 days in a row. But
Yeah.
I saw another article overnight, and that's why I'm bringing it up.
Yeah, yeah,
because it does seem to have had an impact on this morning's euro sterling move, at least.
Yeah, definitely.
Yeah, so I'll be keeping an eye on that as well. Then for the CPI, well, I think you've laid out all the different scenarios. We know that sooner or later it will peak. When it will peak, well, it's perhaps today, and let's see what's happening. It does still feel that I think the market is less positioned now than it was overly long dollars for a while. So I think a lot of positions have been scaled down. So there is room for decent moves on the back of them. On the other hand, if you have like split data where the headline number comes out just a couple of ticks and the core still stays high or moves up that couple of ticks, we might be just trading volatile ranges this afternoon, but stay in ranges. So it's going to be important to identify what those ranges could be. If we get both down, then the pivoters will be out screaming and shouting, and likely the dollar will get a serious knock on the head.
Yeah, and what I'm showing on the screen there is exactly what it's all about: Fed rate expectations. That's the probability pricing for the December meeting. 75 pip hike, 55.5, 50 pip hike, 44.5. So leaning towards another 75, but it's pretty even numbers compared to what they were going into prior meetings.
I'm actually, if I may say one word about these expectations. If these are like expectations, I find it quite amazing that the probability of 75 is still higher than the probability of 50, because to me, what we heard from most of the Fed speakers, including Powell, is that giving the hint that they shouldn't be hiking, continuing with the 75 BPs. I'm personally very surprised that this probability is still so high for 75 BPs. I thought it would be much higher for the 50 now compared to 75.
Yeah, but then therein lies where you might get the trade or the bigger price move, because if that shifts the other way from 75 to 55, that's going to come about because, you know, yields are going to drop, the dollar's going to drop, the market's going to reprice everything more towards the 50. So the bigger price risk, looking at just those probabilities, is for a soft number in the CPI. So
yeah,
again,
I think, it's going to be wilder if we get a soft number than if we get a good number, perhaps. I'm not ruling anything out today. I'm probably going to be just perhaps get some look at the number and then see whether it warrants to range trade or break trade. The thing is as well with those probabilities, and I'm always like, and I keep on repeating it, but I'm very skeptical about how do you when we say that the market is pricing something in, because now there's going to be a big discussion about, is the market pricing in 75 BPs, or are they pricing in a higher terminal rate because it's the higher for longer kind of thing? And that's where I'm always very skeptical about when people say, oh, the market is pricing in this. I think it's a lot of hedging. A lot of it is hedging, and yeah, people need to hedge against what's coming next. But that's
Amen. The good thing is that with Fed Fund futures, we can calculate exactly what the market's pricing for each meeting. I used to do that when I was a market maker in OISs, so overnight index swaps. I used Fed Fund futures as a hedge and as a way to calculate to the nearest basis point, right?
Yeah,
what the market's pricing. But you're right in terms of, in the long run, you see the curve flattening out at 5.2, 5.1%, whatever. That's a different story. But you can actually see what the market's pricing per meeting quite accurately.
Yeah, there's also euro dollars. A lot of people look at that sort of thing.
Euro dollars are three-month instrument. They're not as granular, but yeah, you're absolutely right. That's another way to look at things.
Yeah, both you guys are right, and we should add probably the disclaimer. These sort of indicators and probability odds and that sort of thing, it's not a 100% definitive guide. Okay, it just gives you an idea. For most of us in the retail space, it just gives an idea which way the market's leaning, which way the wind is blowing, and so gives us an idea that if something changes, where the bigger price risk is going to be for any particular event, be it ECB, Fed, Bank of England, whatever it is. So it's just having in the back of your mind which way the market is sitting, because that gives you an idea of, as I say, where the biggest price risk comes, depending on what data or event happens at any particular time. So are you looking at anything in particular, Stel, for the CPI? Obviously, you're going to have one eye on the metals. I know you're watching Dollar Mex as well.
Yes. No, those are the two things that I'm looking at, simply because they are at or very close to breakout levels or big support levels. So I'm still looking to add to my metals longs, but if the number comes in weak, if it comes in below 8%, the CPI and the core CPI doesn't explode higher, I'm going to be adding wherever silver is trading at the time, and I'm doing it very, very slowly. So my position is still quite small, but I'm slowly adding. Yeah, USD MEX is, you're quite right in saying it. 1941 is a low, and I'm going to be looking at that. If we do get a weak number, dollar gets sold, this thing could well break. If it does break, I'm selling wherever it's trading with a stop at, I don't know, 1946 or something like that. It's going to be close. Okay. Yeah. And remember, if you sell this pair at the moment, you get some very nice carry. So you're borrowing dollars and you're buying pesos, which have a higher interest rate. So that's what I'm looking to do. Obviously, this could go wrong. Everything can go wrong, but I like the scenario where the probabilities are kind of on your side. And having said that, I don't know if I said this on Flow Show or on Face yesterday. I think I was on Face, but it was at the time. I still remember Bitcoin was down 6%, and I was saying, look, we're breaking below the big level. I think it's a very nice risk reward to be selling Bitcoin here, and it was down 6% on there. And I said, go back to recording and hear it. I said, it doesn't matter. You can sell something that's already down 6%. A lot of people don't want to do that, but look what happened afterwards. It went down another 10% same day. So it's and I still think this bounce in crypto should be sold into, but I'm gonna wait for the CPI before if I do something on those.
Yeah, I mean, obviously, big news, part of the driver, but it just shows you when you come up against big levels, you've got to respect these big levels, and they are the ones that can give you the bigger rewards. I mean, look at a Bitcoin, that's a huge zone. Going all the way back, 2020, 2017, 2018, big old zone. And if you're just purely a technical trader, these are the levels you need to look at, because if they go, then they can go bigly, as Stel's just mentioned.
Yeah. Also, one more thing regarding the MEX. We do have Mexico today, expected to hike 75. So that's another thing you have to be wary of if you do take a trade on the MEX.
Yeah, it's late tonight, isn't it? So yeah, be after Europe is shut, so not the best liquidity time of day for that sort of thing. So yeah, keep an eye on that. Kay, do you want to take the captain's chair, as we say?
Yeah, if you want to, I can look at a few things, and I'll first of all go where Stelios just left it. Well, not really in the MEX, but hang on a minute, just one sec, please. Yeah, there we go. But into the metals first of all, because I'm keeping an extremely close eye on them as well. I think they're both holding up very well, and they're just waiting for one thing: is a slightly below expectation number to explode. Gold, we have seen get through that 1680.89 in quite a it was quite a move when it broken above, but now we're stalling just below the 720.25 zone. I think that's an interesting one to keep an eye on for the CPIs. I know it's $20 higher than here, but if inflation turns the corner and metals and yields come off, metals will really take notice of it. If in turn we get a higher CPI, keep an eye, which is now the zone has widened out a bit because of those trend lines, in my opinion. But so now we're looking at a $12 support zone here, between 70, you call it even 75, so $15 support zone here, 1675. 1690. That's going to be an important zone. If we come to rest on there and take off again, it could be a very nice move as well. Break below, that's not going to be too much for the liking of many, because I think quite a few are looking up now in gold. But I think this one could be a lot spicier and faster percentage-wise moves. It's a smaller market, so be careful about it. It can go really fast, but I'm really keeping an eye on this 21.5 zone in silver. If that goes, we could really start to push up higher. But for that we will need slower data on both accounts, in my opinion. But okay, there's going to be some activity, I think around 22 and a quarter, but this one is holding pretty well. Of course, we need to get above again, and if we start to get below 20 and a half, the whole thing, the whole house may fall apart for a little bit. But without too much of drama, I'm still going to be, if we get a move back down to 20s or so, I've got a feeling it's we might be closer to for a lift off in those metals, a real one. Because as I said, I mean, CPI will peak at some stage, but it just depends on when it happens. I was off yesterday, so I haven't followed the whole story, but there seems to have been some comments on coming from the OPEC bots saying that they might be looking at something to do with the outputs also. I missed the details. But oil has really reacted to it. I think, what's his name? I forgot his name. Who said?
Beryl.
Sorry?
Beryl.
Yeah, him. He said something about they could do something if needed, no, for the outputs.
I don't know. He was moaning about how $100 oil wouldn't be good for the global economy. He's been trying to talk the OPEC lot into not going with production cuts. But you know, he's not that big an influence on stuff being part of the IEA in terms of what they do. Just before you continue, I just want to pull up something that's been posted in our chat room, that potentially there is something going on this incursion stuff in Ukraine and Russia, that there's some sort of deal between both sides. That's in our chat room, that the Russians will leave the riverbank in a managed military retreat. And that would not have been possible without a managed military-to-military negotiations. Negotiations have been going on for weeks. The messenger is potentially Saudi Arabia. So this may be something that leads to some headlines dropping that this move incursion is part of some sort of negotiated ceasefire, whatever you want to call it. It's all bags of salt stuff at the moment, but this is what's coming out at the moment. Just to keep an eye on that. And if you're in a chat room, pop into the Flyonomics room where you can find all those details being put by our guys in there. But keep an eye on that. If we get a big headline, that's going to rocket risk trades. Sorry, Kay, I just wanted to.
No, absolutely. And it's quite funny that the euro didn't jump more on the back of it.
No, I'm looking at it. It's gone down, in fact, hasn't it? So.
Well, I mean,
the market's not buying it, is it?
There was this little blip around the top of the hour, and it may have been some fixing also as well. But it all came out at the same time. There was a blip in dollar China as well, because it said that the new the new China Politburo Standing Committee was having a meeting, and then we had a little blip as well in the China, and then it adds straight away, must unwaveringly enforce COVID dynamic zero policy, and back to off dollar China and its relatively weakest of the day. Yeah, just want to mention this. This oil, because it did break this channel it was in, and we are now on the next decent support here around 85. If that would go, we could be trading down to prior lows again around 80 to 83 bucks. But I wonder if it's really going to be lasting, or is it just on the back of those comments that came out. Anyway, and then talking about what Stel mentioned last on his last comments, dollar mix. We've talked about this level, yeah, the low 1940s. We've talked about it a lot. If we get through there, we could be talking about 18s next. Keep an eye on what's happening after Banxico today, because as we already pulled up this line several times from 2017, we've held it last time, but now we are down below it. And yesterday we had a little push up to the that level. I think this whether the close is above or below 1960, 65 could be important for dollar mix going forward. Of course, we still have some 1680s in there. There's going to be resistance when we move up. Banxico is supposed to raise interest rates by 75 BPs today to 10%. That's a high yielder. That's a real high yielder. And I think if not too much positive news comes out of Euroland, for example, on Ukraine, we may be looking at this corrective activity to have been it. I'd say watch 1980 for a starter, then 20 bucks on the Euromex. I'm virtually flat. I've covered a lot. When was it? We are up. I think it was around Friday or Monday. Monday, I think I covered a lot of my outstanding positions. Really want to wait what's going to happen with this. But if we start to get back below 1940s, I think I may be pressing some buttons again later today. It could be that MEX gets a double push in the back if US CPI comes off and then Banxico raises 75. We have to bear in mind, though, that Banxico already said that they may be not following big hikes made by the Fed in future. It seems they seem to think that 10% is going to be where they have to be. I think if I go back to, is it yesterday that those numbers came out? Mexican, there was some data out while I was off.
Chaps, sorry to interrupt. I have to jump. I'll let you finish up. Okay. Thanks, guys.
All right. See you still.
Bye-bye.
Yeah, so the Mexican CPI came off, but just a tad, and it's still hanging around the 8.48, 8.5%. So for them, moving up to 10 may take them into levels where they feel comfortable now with where inflation is trading. So yeah, watch what's happening after Banxico and the CPI tonight. On the majors, just want to mention dollar yen. We've been trying to, we have broken, okay, through the channel from 130 up to the highs, but we've been trading sideways. We've been trying to get through this 145.5 a couple of times. The trend line is slightly going up, so those three prior lows, we've set in a fourth one just above 145. So we can safely say that 145, 144.80 is going to be the big zone where we have to watch it. If we start to get back, creep back up, I'm seeing here a bit of a triangle. We need to break above 147.80, I think, to get going again. But bear in mind that compared to the lows that have been seen yesterday in the low 145s, if you get up to 148, we're again in that zone where Kuroda was telling 200 to 300 points in 1 or 2 meetings is excessive. So will they be there stealth intervening again? It's all part of the possibilities. I mean, I'm just having an option open and started to hedge it a little bit. I've got a 147. That I put on a 147 call. Ideally, I'd look for it to move a little bit higher again, so to be half and play around with my premium rather than anything else. But if the CPI comes in materially weaker, keep a very close eye on this 144.80, 145.25 in the dollar yen. It's going to be really the make or break zone. If it goes below here, I think we could be really looking at lower levels. Why not get back to 140 over time? If we get a sticky number, a stubborn high number, I do think there is room to get back up into this 48.5 zone if we get through this 47.80. Euro dollar, I don't know. I really don't like to trade euro dollar right now unless we get to the 101 or on the bottom side back under here 98, 99, 98, 60, 70 where we could have some activity. But as I said, if we get a sticky number to even like just a couple of ticks lower, I'm not sure that we're going to be able to break the broader ranges in the euro dollar. It's going to move hard, but I still think there's a fair possibility that we trade volatile ranges right here and now, because there's still so much uncertainty around the ECB as well. Cable's been an interesting one, right? We had this really big run up the sessions before, and then yesterday, like a really crackdown. I think it was because of the continued add-ons to taxes and more taxing of businesses and stuff, which is really not of the likings of business managers. And I haven't seen any support for the City of London in their plans. They were talking about capping the extra layer of taxes to the banks, but even with a reduced extra taxation, if Sunak and Hunt put the corporate tax at 25%, they will still pay 1% more than they are paying now. So This one, I'm a bit skeptical about the viability of any moves higher, unless we get positive news out of these negotiations that we are seeing now between the UK and the EU. In the EU, that should really have quite a significant impact, I think, for the sterling in the short run, if we would get some positive news out of there. Aussie and Kiwi, yeah, we've seen the Aussie rejection here. It's been coming back down, probably also weighed by what's happening in China. A bit of a mellow RBA data, a bit average in Aussie land. We're on the 64 figure. It's probably going to be whether you close below or above 64 the figure, which will be important tonight after the CPI. That's really it. Back down here, still very strong support around 62, 90 figure, 80 figure, 70, 7.75 figure. Top side, that's probably a bit ish, this one. But anyway, keep an eye on 64.60 for a starter. But the big zone will still lie where we topped out before, and that's 65.25, 65.5, bit of an overshoot, 65.60 perhaps, and then see what happens there if we get there. Interestingly, on the Kiwi, which was holding really well, it has undergone exactly the same move as the Aussie, because if you look at the Aussie Kiwi is not moving much. I don't see too much of a reason for Aussie Kiwi just keeping the coming off so much, but I just think it's like market is probably trading just both currencies in the same boat right now. If you buy Aussie, why not buy Kiwi? If you sell the one, sell the other one as well. 58 the figure. That's where it's going to be important tonight for a close. Call it 57.80, 58 the figure. Watch that one. It's been a low prior as well. It's been a good break level and sorry, springboard to go back up to nearly 60. And if we start to get above 59 again tonight after the CPI, then the possibility is there to go back up to 60. So those are the levels I'll be keeping an eye on. And I'm looking at the clock and I give it back to you, Ryan.
Yeah, thanks very much, mate.
Perhaps you can, yeah. Just a reminder to people, there's a bunch going on in dollar China around fixing time today, right here in the zone, 27, 28. Ryan already mentioned it a few times. And just keep it in mind, if it's out of sync with the rest of the dollars come 3 o'clock our time, I think it is. Yeah, the States have changed clock, so it's back to 3 p.m. London time.
Yeah, 10 a.m. New York. So yeah, there's some very big expiries going off. Huge expiries going off exactly at 7:27 and 7:28 today. We spotted those on Sunday. For those who are in the ForexAnalytix platform, I do a report on a Sunday, looking at all the options for the week ahead, seeing if there's anything significant. And these popped up on Sunday, and we've actually since then potentially found out who's behind this play. It's a particular play by two banks, or one bank with the other bank on another bank on the other side. It's Morgan Stanley and Goldie's playing this trade. Said to be a over 9 billion trade on dollar one, being up above 727. So that's in effect today. Likely everyone's hedged out and covered, particularly the holder, Morgan Stanley potentially bought calls at 727. We have had the price up to 735, so you would have to think that they would have at least hedged that position in the green in that move. So it may be nothing, but it's not often we get to hear in big options exactly who's playing it and what they're doing. So that's going to give us something to keep an eye on. We've been up, we've been down during the week, bit of a brick wall at 728 this week, but keep an eye on that. And as Kay says, what you tend to look for in options, if there's big expiries, is whether the option is putting the price around out of sync with what else is going on in either the dollar, in this case, or the yuan. So, for example, if we see real big dollar strength, you know, over the CPI, let's say dollar yen's running up to 149, euro dollars at 0.98, and this one's stuck like glue to 727, might give you an indication that there might be something, a trading opportunity there, because once the option expires, this pair might gain as well to catch up with what else is going on in the dollars. So that's the way to look at those for the options. As I say, if you're in the chat room, check out the options report, because you'll see what's going on there. Aside from that, I've not got much to add. I'm going to be in management mode for some of the trades, or looking to pick up the other side of the CPI report. Aussie dollar confirmed further the failure of the big zone up here, got back above the former break level, 64.80.85. Since then has carved its way all the way down through the other levels. This was the fear I was talking about. If we can't make hay up here, there's only one other way it's likely to go. I would have liked it to hold up the 640 area, or 64 area, but that looks like it's holding under for now. So we could get a further move down to 63s, mid 63s, low 63s, that sort of area. But this could just be a bit of a blow off the top and we come right back to it. So keeping an eye on that one. Gold, just from my perspective, still maintaining the break through the 85 zone, not giving up too much, holding the 1700 handle at the moment. We did get a move through the moving average. It didn't last. Got up to that next band of support, almost to the pip, pretty much on the pip, up at that 722 level, an old level, and that old fib area. But while it's staying above 1700, keeps this break alive. That's going to be the line in the sand down on that zone. If we get down and test and hold, maybe we have a bit of a range setting up between that recent high and the zone. Back below, we go back into this box down here. So on that note, I hope we've given you enough coverage and advice for the CPI coming up. Please trade safe. Don't gamble into it. If you're not sure, stay out, let the dust settle, watch the analysis, judge it yourself, then make the decision. As I said, for all the number guessing, for all the levels, whatever, the one question you have to ask with a CPI is it going to change the Fed? If it doesn't, you know how to react. If it does, you know how to react, or hopefully you should do by now. If not, you need some more homework. Anyway, thank you very much to Kate and Stel, who's already disappeared. Trade safe, guys. We will see you all tomorrow, and we'll all see what happened today. Thank you very much. See you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.